Good morning, traders. This is Rose. Today is Wednesday, August 21st, 1 minute after 9 a.m. Eastern Time. Good morning. Okay, I'm gonna start shortly. Good. Princess. Okay. I will take that. Okay. Yesterday. Wow. But I want to go one day prior before I talk about yesterday, since we have plenty of time till open, but I want to check these I want to check the economy news calendar before I begin, so I'm aware of what's to come as far as news goes today. All right, so just give me a second. Okay. Atlanta Fed business inflation expectations, 10 a.m. Fed members having speech yesterday, several of them actually, did talk about the employment market and the inflation is all that. So I'm sure Atlanta Fed business inflation expectation could be a reason to talk more. So just pay attention. It's 10 o'clock, close of bar 6, open of bar 7. We could get another interesting price action today, even though it's not a big news, but we are prone to move in the market fast these days. So if you're trading oil, 10:30 a.m. Eastern Time, the inventory report comes out. If you are new to oil, inventories are a great way to trade the news. I wouldn't recommend you to trade the news or any new trader, but it is a good catalyst for big moves. If the inventories are high, look for price mark down, anything, a lot of something in the market means it's just too much of something in the market means less prices, right? Sale, slashing of the prices. Less of something in the market means price goes up. So if the inventories come in down, less inventories, that means oil is going to go up. They're going to mark up the prices, barrel prices. So pay attention to that. That's how you should read it. There's a 20-year bond auction at 1 p.m. Eastern Time. That is a big one. We have then follows the FOMC minutes at 2 o'clock Eastern Time. Now and then you have the Treasury news. Don't think we need to worry about it, but it's kind of bundled with the FOMC minutes. FOMC minutes is not FOMC, regular FOMC, but time to time you get a good move, maybe a bar or two, so you should just pay attention at 2. Starting at 1 p.m. is the big deal, 20-year bond auction. Okay. And tomorrow, Thursday, you're going to have Chicago starting 8:30 jobless claims, Chicago Fed. I don't think we need to worry about that, but the PMI is 945. That's a big one. Existing home sales 10. So starting 8:30, I think you should just get a nice brunch or something. Well, brunches would be too late, but get a nice breakfast, make some good coffee, run some errands in the morning, come back after the news, 10 o'clock, and then I'm sure you'll find a good trade. But it's just too risky to trade back-to-back news tomorrow. And then Friday, new home sales at 10. Jerome Powell is scheduled to speak at 10, so that's a big deal. So Friday is going to be a big deal. It's not the end of the month. We have another week to go, but still, he's going to be the catalyst. So the market will probably going to move a lot better than it did last Friday. All right. Okay. So looks like 10 o'clock is the start of the news today. All right, that's fine. The day before, I'm going to talk about yesterday, but I want to talk about the day before. We had a really nice double bottom and 5 more reversals at the open. Small trading range open, but it was really a spike and flag, okay, and we came down and test way below, okay, the pullback part of this, what seems like a spike, but not really the best spike. So basically what you're getting here is a trading range. We've tested, if you divide the trading range into 3 sections, we're testing the lower third. That's where the buyers are. You get a surprise bar here, but it's not breaking out of anything other than this tiny little trading range. And testing the low of trading range in the lower third, they're going to trap you. It becomes a exhaustion, right? I don't know what caused this. All I'm basically attributing this to the test of the area of interest, which is the heart of a balance zone, and immediately found buyers. We got an inside bar. I said you need to buy above it, and then from there we had a beautiful trend. Trend ended up with making a new high, closing above the moving average. So you're going to get 50% follow through buying the next day open, which is yesterday. You're going to get a 75% sideways and down reversal or trading range, right? First you get the trading range and then you get it down and up, but mostly down. At the end of the hour and a half, 2 hours possibly. So the first hour is 12 bars and the second hour is 24 bars. We got that sideways and then went up, but that was a minor reversal. Minor reversals happen when market actually does a strong move down or strong move up, and you get 2 legs. After that 2 legs, you go sideways, right? Any trend goes into sideways. It's going to test a starting point of the second leg, but that's where the bears are sitting. So what I look for is gap areas. If there's a gap, before the gap, I look for the start of the second leg, which is right around there. If there's a gap here above that, I'm going to mark this. So this area is an area where the early sellers are waiting. If you buy this, you're basically buying at the top of a trading range, and you're going to either look for a second leg up or you're going to look for a failure of second leg, or a second leg trap in this case. Now that's a second leg trap right there. How did that happen? Well, smaller time frame, there's already 2 legs here, okay? But we're not on the smaller time frame, so we're trading the 5-minute chart. You got a flag here. What happens to flag 75% of the time? Those flags will fail to break out from the top of a trading range. So there's a chance of actually selling, not buying. However, strong 2 bull bars, right? So what am I looking for here? I'm always hunting for tight trading ranges. First, the trading range and the balance zone, the heart of the trading range in the middle. That right there is my sweet spot, right? So what's going to happen is that if we sell, I'm looking for a market to come down there. If I'm selling, I'm definitely taking profit. And I'm looking for a second sell depending on what kind of bear bodies I get. So is 2 bull bars, but the problem here is that this isn't a breakout bar, but this is a breakout bar. However, within a trading range, so it's a leg in a trading range, right? Here's the top of the trading range. So you're buying against something that is very powerful. Bears are allowing bulls to do this, but only to trap you. Market makers know that you're going to get trapped because you see this, you buy this, you're looking for another leg up. You could have gotten the leg up, but you didn't. So they trap you right on. First sell, low 1, low 2, 33. You can quickly sell, right? But if you are not happy selling closer to the moving average, then don't sell. Then you're trapped out, right? You're not selling. So what do you need? You gotta wait for 50% of this leg to be tested, or heart of that trading range to be tested, and look for a pullback, and then look for a second entry sell at the moving average. All right. So basically, you're looking for a bear flag. Okay. So market is, look, you have, okay. So this is the bear flag, right? So I actually counted this, and look, you're up on this. down on this, up on this again, down on this again, up on this again. So 3 legs up, small, but they're there. So every time the bulls are trying to buy, they're not getting strong bull bars, right? So they're not even able to close above the moving average. So I'm looking at this as, all right, bulls are trapped. They're trying to buy somewhere ideal, makes sense to them, and they're trying to break even. When they get the idea of, okay, we're not going to break even here, we got a gap here, every single time the bulls are buying, they're not able to close bull bars above the moving average. There's a chance, high chance of making a double top and sell. So they're going to take that chance and exit out of the market, right? So that's what they're going to do. And that's what they did. So you got the double top, really nice sell signal bar. You could sell the close of that bar 41. Many already sold here. Many sold up here, believe it or not. And you got a beautiful bar 41. You can sell underneath that too, right? So we're probably going to test this bar, these 2 bars starting point, which is open right there, right? So we might even test the 29 low, which we did. Came down, but know what you are trading. You're trading possibly leg 1, pullback, leg 2, pullback, leg 3, or the whole thing is leg 1, pullback, leg 2, right? So look left, all right? Say you're still selling and you're not very happy that you got this bar 44. That's what I call a kicker, okay? Kickers are a sign that market is going to shift soon. And if you are still selling, find out if you're selling into some kind of a support, breakout test. Yep. And here is breakout test. Look, big breakout comes down and another big breakout. So this is a breakout test right here. If you're selling into it, they're probably going to trap you. But bar 43 is, bears are not all that happy. So if you're still selling and you're stuck, what are you going to do? You're probably going to sell again. And what do? You just break even and exit out as quick as possible. So you sold maybe here. You're looking for first sell, maybe second sell, right? Maybe you sold that close. Market gives you that, right? Break even and then some. But it can't come down to the close of 43. So that means that's it. This bar 50. You need to take a look at time. If you haven't scheduled your daily alarm clock, okay, or calendar, what happens with bar 48 to 50? We could get a swing, right? That's what it's setting up. So it's also a flag. And I told yesterday, this looks like a bull flag, and the market is trying to rotate because we had a nice sell, we had a good pullback, and the market sold again, but it's struggling here. Bears should not have allowed 44 is happening, right? So this is it basically. It's a sign that that's the first entry, possible second entry, third entry, right? It's turning out to be a double bottom or even a small wedge, up, down, up. I'm sorry, counted wrong. So it's an up on this, down on this, up on this, down on this. Okay, that really is a double bottom. There is no, I can't count. I guess I could count. Up on this, down on this. Okay, up and down. See, I can't, no matter what I tried 3 times. This is it. So that's a double bottom bull flag. So that's basically a bull flat. So double bottom comes from there, and you go above it, and you go. Double bottom with a trap, right? Goes above it, comes back, and go. So it's a form of a bull flag. I couldn't count 3 in there. If you can count, your eyes are better than mine. I must be getting old. Anyway, so that is a flag, and the market is rotating. Now, what can you do? You can count for a second entry long, right? You can say, look, we went up, first pullback, first buy, second pullback, second buy. That right there is great, but we're not above the moving average with bar 51. Now, you can certainly start the buy here. Right, if you enter above this bar, stop goes here, that's a 1R, right? Or you could say, nah, I'm not going to put my stop there. I think I'm just going to put myself underneath this bar, so I'm going for a 2R. Or you're like, okay, I'm not so sure about that. I'm buying the close of that bar 51 is, I want to swing this. I don't need to utilize 43. So that's your 2R right there. And it's to the tick accuracy. You buy the close of 51. It's 1:30 p.m. Eastern time. Since market sold already with several legs down, it's done. It went sideways, and it's actually bear flag kind of failed to break out. When a bear flag fails to break out, we're probably going to go up here and test the highs again. So bulls take over, but you are in another trading range here. So I kept telling everybody is since the morning, you guys really need to, I kept posting charts and marking this area and saying is you guys really need to pay attention to this. We're going to get back to that. So there are two kinds of sell zones. One is right there, but slightly above is a gap. So you have to consider that gap as an exhaustion is for bulls and then the bears to sell again. So we got that. And now bears, they're selling the flag, but they're not getting a breakout. This is not a breakout. And even you see, okay, say that this is a breakout, right? How do you determine the breakout is going to get followed through? Look at the bar closes, if they have any wicks around them. Like this one right here is, yeah, it's decent. So it's probably going to get a second leg down, sideways and down. That's your flag. But what about here? You got this bar, not a breakout. You got that one overlapping, but it's a good close. So if you sell below it, you're probably going to get, okay, so here's how I would measure that. You're going to get is from the open of that bar to the close of that bar, you're going to get a measured move, right, is for the breakout. But you're breaking out within a trading range. So just grab that measured move and just don't worry about the rest. You see a big bull bar like that, exit above it. You don't need to go sideways and fix anything. You see this bar, just exit. You might give back a little bit because you probably entered late with the 42 close, but it's better than just trying to fix something that you may not. And then missing this move up, because once you enter this move, whatever you lost here, maybe at 2 points, 1 point, whatever, you're going to make 10 folds back. Okay, so it's markets enters here. Now you see the big bull bars, right, is warning to bears that the breakout failed. So therefore, this is probably a reversal coming up afternoon. So 1:30 p.m. Generally, I look for average 6 bars before it fails. So these moves can fail after 6 bars and continue to go downwards. Now I'm counting somewhere around bar 50. 1, 2, 3, 4, 5, 6. Bar 6 is actually a breakout bar. This isn't failing. So now you should be looking for a 1 hour at least move up. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then it starts to come down. I don't have more bull bars. Maybe time to exit here. Okay. So you can also count from is bar 48, but we made a new low, so I start with the 50. And then we come down with several legs down. It's a small pullback bear trend, but lots of wicks. But you get a streak of bear bars, so that's good. When I see something like this, we're probably going to try to come down more, but look what you're selling into. We have is leg in a trading range, so we're probably going to test the starting point or the breakout test area before taking profit. And that's what the bears did, and they ended up forming a channel down with several pushes with a double bottom. So that means this is probably a bear flag. So is big bull bar, everybody is going to exit above that bar. That's bar 76. You should not be trading bar 75, 76. Okay, is because that's banks enter. When I say banks, it's really institutions. It's easier to say banks. So no, when I say banks, that's all big guys, hedge funds, institutions. So this is when they enter, and they are going to trap you up and down. Okay, not okay to trade. And I'll tell you this is I signed up with evaluation accounts with a brand new company yesterday, and I'll tell you what happened to me yesterday. I blew the accounts because I was trying to YOLO this, and that's what it is for. You buy something, that's the fun of it, because I'm not trading with my own money. So, and it's evaluation, it's sim. So I'm testing out. That's my favorite thing. I like to test these bank hours. It's the end of day. It's the imbalance, end of day imbalance. Sometimes you get big moves. And I do that. When I'm doing that, I generally tell people that I'm doing that because it's just the fun. That's the entertaining part that Al talks about. You can do it in sim. You don't need to do it the way that I'm doing. Do it in sim, but before you try to trade any end of day, watch the chapter in the course, or read the books that Al written about and how to trade end of day, midday, the beginning, the opening session. So there are rules to these. Is my advice to you: don't trade this. Don't take any risks. Just sit down and watch. This right here, sideways price action, any breakout will fail. They're going to trap you. Okay, so first they trap there, then they trapped here, and then start to go. And then yesterday is market reversed back up. So you got 1, 2, 3 wedge, bottom, high or low. That's a trend reversal bull flag. Market wants to test these highs, which they did, but we're sideways pre-market, not all that strong. So can market sell today? Yesterday I said we're going to test this line, even the day before. We're going to test this day's high, which we did. We trapped the bulls. We came down, closed the doji. Not all that strong sell signal bar, but that's profit taking. Now, can we sell this? Is this good enough? Probably buyers underneath, or they might even start to buy. So 56.19, where are we? That's closed around 56.1975, say 56.20. Oh yeah, they did. So we went up to 56.33. So we're right around at this line again, and we could get bulls briefly wanting to test these highs if we can get above the high of yesterday. However, this area is still a problem for bears, but it has been tested twice, give or take. If I actually put that part of the gap in there, it sold once, it sold twice. We're going to open up around 56.31. So we're going to open up smack in the middle of it, right around the high of yesterday. I'm going to look to see if the price can get above high of yesterday, close this gap, and then get back up here. If I just get the hint that this gap is not going to close, needs to overlap right there with bull bars, or close bull bars above that blue line. If I just get the hint, then we will have a wedge top, and above the high of yesterday, we're going to trap and we're going to come back down again. We could come back down to here. We could come back down to here. So just watch out. That puts us in a trading range trading. Okay. But hourly chart is right here no, kicker is not a bar that kicks you out of the trades. It's basically a sign of either strong bulls are coming or strong bears are coming. Suddenly, say market is coming down. You got a bear bar like this, right? And suddenly you have a high open with a bull bar like that. They're overlapping, but it's a high open and a high close. That's a kicker. You might get another one. That right there, pull back, they're going to buy it. This is the kicker bar. Kicks up. That means if you're still looking for a market to come down, you're going to have to sell here or there, look for a quick pullback, exit out, or exit right away. And the same thing for bulls. So you get a bull bar, and it kicks down, okay, very fast. Maybe opens up here. I don't know. I don't want to see a wick though. Better without the wick. That's a kicker, okay? So you might just go up a little bit to give you exit, but only to come down very quick. That's what, it's just some of the bars that I pay attention. I'm not really a fancy bar trader. I only think that there are only two bars, the trend bars or the trading range bars, as Al Brooks outlined it for us in his course. So you're either trading a stop order market or you're trading limit order market. So that makes life easier rather than trying to remember a bunch of, bunch of fancy bar combinations. So we are bullish. However, we're testing a gap area, and this gap did not close. See that right there? If we make a double top or of some sort, we might have a wedge top, although I think the count started with this bull bar right here. So up on this, down on this, up, down. We might get another up, have an attempt to close, but if we fail to close this gap, markets start to come down back to the last week's high breakout point or to the moving average first, but we'll see. So I'm not really excited to sell without any signs, but we shall see. I think the market is going to try to go to 56.47.50 area, and then it's going to try to sell there. At the open, let's see if we can actually close this gap right here. You don't need this, so I'm going to get rid of it. Yesterday, the day before, the way that I look at things is opening ranges, right? So I have an opening range here. First 6 bars I take, right? So that's the opening range. And I'm looking for a breakout follow through. So if this is the range, we break out, I don't just sell that right away. I look for a pullback to the breakout and then sell. We didn't get that. We got a bull close immediately to the 50%. And then we got a breakout, right? Breakout, pullback, and they're buying. So you're not going to sell, you're going to buy. So the same principles apply to here. And this box is right here already identifying the opening range for me. And here is the first bar 1 to bar 6, first half hour. The midpoint right there. We got a break right there. So we broke and then we came back and it sold. Then you got a big bull bar, but it's probably going to go sideways and try to make a new low. They didn't make a new low, but there is a wedge there and a failed flag. So we're going right back to it. Okay. Now, are they closing consecutive bull bars? I don't see consecutive bull bars closing inside the opening range. There are 2 bars, but they're not consecutive. And then you get the second sell signal. You can sell, you can target these lows, right? And market even made a new low. So that's great. I measured it. Take that. That's my measured move right there. Here's a breakout. That's your 2R measured move, 2R. Right? This right here is dangerous. I don't like it. Bulls will buy. Bulls will buy above this bar, but it's the first one that they're buying. So if they don't see a second bull bar, they're gonna be disappointed. So they're gonna look for bear failure. They're gonna give bear second time sell, and if it fails, hint bar 50, not a good close. So now they're gonna put a buy order above it, right? And then they're gonna go long. 2 bull bars, you can start to measure from there, right? You can put your stop there, right? So that you should definitely scalp there because you're getting closer to the highs. Since 2 legs there might be some sellers there. Sellers showed up a little bit later, but they did show up. So you're not going to sell here blindly without a bear bar signal, right? If you put a sell order right here and then this traps, you're going to have to sell 2 points, 5 points, 10 points above again, or somewhere from that high. And but they sold. But if you were to wait for that signal bar, that's it right there, and the trigger bar, you can sell. You're still gonna make money. But I don't like to sell or buy blindly in zones. I wait for the bar. So yeah. So every time I see 2 legs, I don't care how strong the market is, there's always sellers waiting there. So I look for a first sell, second sell. If the second sell takes out that midpoint and continues to sell, that's a swing. I'm going to target the lows. If the second sell comes in and then suddenly goes back up, this is done. You're done. It's not going to swing. It's seeing some kind of a magnet up there or measured move. It's going to violate that zone. That means that zone is not that strong. There's a better zone above. So just like yesterday. All right, market is open. bar one here. Let me check one thing. One of the bars are awfully small. I need to see them. Okay, so we open in a trading range. We open in a smaller trading range. That's in a bigger trading range. It's not a good start, but let's just wait a little. We're closer to the Globex high, so we could briefly break out. I think market could get us to the 56.4750 area, but there's not much information here, so I'm going to wait. You're open top of a trading range here. Bulls who bought, they're taking profit because they see a bull flag. So they're looking to see if bulls are strong enough to break this and get to the prior highs, then they're going to look for a bull close, then they will buy. So right now they're scalping just to make sure that this doesn't collapse. That's why you're getting this bar. Plus it's the top of the trading range, so there's a reluctance. What about bears? If they show up, where do we go? We could suddenly sell into 56.07, 06, 05 area. I believe Brad warned you guys about yesterday's price action the day before. He's updated the daily blog, and he actually warned you about this. So hopefully you guys read that before start of the trading day. We're in the middle of this trading range. So divided into three sections. A bull's trying to get up here. All right, so if this is your trading range, so we're right at the boundary line, open of the day. We get a bull close, market is going to reach up here and take some profits. Okay, upper level is a sell zone. We've already tested it slightly, came down. Now we're probably going to go up here, but we need a bull bar. Now, how do I trade this? If I really am inclined to trade this, how do I trade this? I mark the high and the low of bar one, and I'll look to see which way we're going to close. We close a bull bar, market can go up, but there's also a wedge top here, so just be careful. Not a good place. The context could be okay, but the location could be bad for those who are looking to buy the first breakout bar. So you always have to look at two things, the context and the location, before you decide the direction of the trade. At the open, small gaps always close, or at least high probability that they close. There's a small gap to the downside here. Two overlapping bars. Bar one is a doji, sellers above, buyers below. Excuse me. Nothing closing above the boundary line. These black lines are boundary lines of three stacked trading ranges. These are mid-range, so they're always a good place to scalp. We've tested the above, but bar hasn't really closed. Got a wedge here, 1, 2, 3. Here, 1, 2, 3. There's a gap here. Bulls trying to close the gap, so they're trying to overlap with bar 8. Bulls trying to get to here, most likely, or even the high of yesterday, but we need another bull bar. As the the first break, the gap, they're trying to overlap with 8. So they're probably going to tag right here, 37.75. But remember I said, if I just get the hint that we aren't going to go there and we're not going to be able to close this gap, bears can show up because there's a wedge top here and there's a little bit of gap here. So I need this bull body to close above bar 2. So that would be the sign number 1 for me to go long. Otherwise, we could just come back into the mid range of these 2 bars. It's very dangerous. That's what I'm saying is, I mean, they already bought above it. The goal is to get to there. Nothing's guaranteed at the open, especially. But bulls did something. If you go with this technique, is I make sure there are bull bars closed above the boundary lines. Then I will scalp. If I go long, I will scalp. I want to go long as close as possible to the boundary line. This bar is good enough, so I bought the close and I scalped quickly, right around 56.35, because it is a flourish trader method of S&P. Floor traders, they are now hedge fund owners, program their machines to do something at any price point ends with 5 every 10-point increments. So I scalped there right away. And then I'm disappointed because I left the runner. I want market to reach there. But I shouldn't be disappointed just yet until the bar closes. Because if the bar closes above the boundary line, most likely we could get there. But I was prepared that bears can hold this gap open. So now if the market takes out the open of bar 2, I will be exiting. There will be some buyers wanting to buy, and with the first pullback, somewhere in the middle, exit out. But I see it. I don't care. I'll just go and take the loss for that runner and be done with it, and I'll look for another trade. Disappointed bulls. They will try to close this bar above the boundary line, most likely in 1 minute and 35 seconds, because they already bought and they scalped, and they were looking for follow through in this line, and they're probably going to get it if they're strong enough to buy this pullback. But if this bar 2's closed, taken out, open, taken out, and then we also take out the bar 1 low with a bear close, that could sell and close this gap and tag the moving average. So some of these things I cannot fight, and it's better than losing a lot, and that's what the runner is, that you just sacrifice it. There's always another trade. So I went in there with 4 contracts, scalped 3 and left 1. Not very happy with this pullback. But let's just wait. Let's not jump the gun. There's already 38 seconds left. If the bulls can close this bar above the boundary line, they're probably gonna go for it. And there you go. See how that worked out. And that is 37.75. 37.75. They did close the bar higher than 2. We now have a bar that actually closed above bar 1 high. So let's just be patient. So close. I'm about to scalp that. I'm 1 tick underneath that line. Because it could tag it and then come back down. But if it tags it or closes 1 tick above, then the gap is closed. We could go to high of yesterday. See how easy it was? Even though you're at the high, if you see what's going on, you can take a trade. I mean, Now my stop is totally trailed. I'm risk-free, so it hits or it doesn't hit, I don't care. I'm risk-free. I'm going to be making money with this contract. So you got a leg one, pull back, leg two, pull back. I'm still looking for bulls to do better here, but bears are still giving it a fight. They're still trying to keep this gap open, which I'm really not fond of it, but 2 and 3 decent. 3 didn't really close right at the high of 2, because if it were to close right at the high of 2, then I would have worried and probably market would come down. But bulls did their best and closed a bull bar on its side above the prior bar's high, prior bar's open. I'm sorry, close. So this is why I'm giving bulls one more chance. But I'm aware of what might come, which is bears giving it a fight to keep this gap still open. So that's why I move the stop, and if it hits me, and I'm done. That's fine. I'll just look for another trade. Because look where we are on a higher time frame. We're testing a sell zone from here. And we have pushed, there's a spike pullback in channel. Channel starting point is right there, right? And if we get some kind of a rejection, we could quickly come back down, and that's what I'm worried about. We could test this area, maybe even lower. And that's what I'm worried about. That's why I will scalp as much as possible. I don't see bulls closing above the institutional level, which is 56.35. Where are the bull bars? So if they're going to fail right here, they're more than welcome to take out my stop and kick me out of the market. I welcome that, because I'll be losing nothing. But it's just that I have to buy again here, so I have a better average price. But they're getting closer to my break even. So if they do, that's fine. You know, you just can't feel emotional about it when you look left, the higher time frames. You know, we don't have a breakout from the Globex side, and you're hitting a resistance. If this starts to come down, there might be a chance to sell this. So I welcome them, kicking me out. So no consecutive bull bars closing above bar 1. That's a problem. In good sell signal bar, but the bulls are stuck, so they will probably going to buy that bar and try to break even. So will this be a break even and continue to give us another leg up? So is this just a pullback? So how do I determine that? Well, if the bulls take out that and that with a bull close, then we're definitely going to go higher. But if they fail and this bar suddenly closes bearish, that was a break-even event, and you need to exit from under that bar, because it could collapse, come down all the way to here, might even test the bar 1 low. So watch this bar, this bull bar, to determine whether or not this is going to get followed through and finish the job, objective, close the gap, test the bar 8, test this line, right? Maybe even go to high of yesterday. Or will the bulls buying here only trying to break even and just get out of the carnage before it starts? I actually did that Petroman several times, and the sessions are recorded. Although if anybody kept any kind of log for that day, I'm gonna ask those in the trade room if anybody has marked that day that I talked about the pit stops and how market moves, S&P only 5 to 10 points increments. Just please share with Petroman, because it's a big subject, but I'll give you a hint. I have a chart, although hold on, I'm gonna put you guys on, just wait a second. Oh, you have it precog? Can you share the date with him so he can go and rewatch, so that I don't have to fiddle with this chart? I can go over it one more time, but I don't think it is the right time right now. Yeah, some bulls will look at this as a leg 2, is definitely, right? Leg 1, leg 2, leg 1, leg 2. So I'm still looking for bulls to continue, but we tested the close and the high, but we're not able to close a bull bar. This bar hasn't closed. There's plenty of time for bulls to close a bull bar above the 3 high to continue to go higher. So they could just kick me out soon, and they probably will if this bar continues to come down. Machines sold at 56.35 and they're scalping. ATR is 4. So 35. They scalp about 2 points and they want 4 points minimum. That's 450. So market could come down to 450 if they want the full ATR. They want the full ATR. But we start to close above 56.35, then we're definitely going to go up here. That's a flag right there. Trying to get a breakout. Right there. Trying to get a breakout. Bulls trying to take out the pullback bar. 4 high. Since a breakout with bar 3, there are probably buy orders above that bear bar, bar 4 high, or they're already entering above bar 5. Bulls still making their way to 37.75. Waiting for bulls to finish the job. There will be some scalping here, but we could go higher. They're trying to close the gap, so first they have to tag here. What if we tag it and but not close above it with a bull bar? Instead, we get a long wick. I consider that as a gap fail to close, and the bears can sell again. But this is where I'm going to take another scalp, 1 tick under, so 37.50 is where I'm positioned, and I just got it. So it went up 1 tick above. Everybody got filled. Excellent. It needs to go 1 tick above that everybody got filled if you have an exit order. I don't do that. I scalped 1 tick under, so I got a very handsome reward there. So I'm pretty much done with the day. I mean, this is it. This is all you have to do, right? Obviously, you can trade more, but it's almost 10 o'clock, so the news coming up, I would take caution, okay? This gap is closed technically, but theoretically, yes, technically not. I need a bull close above that line. Then the market can continue to go higher. So did anybody is bought and held? I did say I bought here, and then I said this pullback probably disappointed. Bulls will buy, wait for another bar to close above bar 1 or above the boundary line. So I got a second signal the bulls want higher prices, and I did buy this pullback just to break even, but they did much better than that. So I ended up with 2 contracts scalped. So you should be buying, not selling. And I think we have established that around here. But you need to take profit there. It's 10 o'clock. This can still come down. But we close above it, we'll go higher. Then I'm going to get rid of this. But we are in the sell zone. This is a sell zone. Do nothing zone. If you buy from here, you take profit. If you sell from here, you scalp here, and then you hold a runner. Okay. That's news. But good job, bulls. So they still have to close this body, not only above that line, but also above bar 6 high. Then we could go and test the high of yesterday. But we're in a trading range. 80% of the time breakouts fail. So I want you guys to be careful here. There's leg up, pull back, leg 2. pullback and leg 3 is you need a sell signal bar to sell or second entry short, which is trader's better equation. We do have is 6 bars, which is the opening range, but we don't have a breakout. So that means we need to close above bar 6. I have to do some data connection changes, so I'm going to put you guys on hold for a second. See, I'm quiet because I don't see the bar closing above that line. So it's just there's not much to say. I think I said what I was looking for, and I don't see it. So theoretically, the is, obviously the gap is closed, but the one thing that the bulls are not doing is failing to close that bull bar above that line. 7 is not all that great of a sell signal bar, so the bulls will buy. There's a micro channel, so they will buy. But even if we go up, we could have a double top and come down. So you're at the top of a trading range, not a good place, and you can see that they have taken profit. But bulls want to test the midpoint of upper wick bar 7. Look how many times the bulls tried. 6, 7, 8, 9. So it's probably coming down here. Bar 4 close, bar 4 low. Bears want 10 point. That's 32.75 to 33.75 they want to test when you measure from the high of 7. Okay. You see that gap right there? See what's going on there? Gap down open is, it's kind of telling you, look, we've tried once, we've tried twice, and we're not doing any good. And they sell. So not only we came down to the bar 4 lows, now right here. And then look where we just end up going to. We close below the boundary line and immediately hit that, and there's profit taken. So here's a problem with this bar. It's a surprise bar. Okay, too fast, too quick, and many bears are trapped out. So that means they haven't entered, or they couldn't enter, so they will look for a pullback to sell. Okay, and so this is going to bounce. That's what the bears are going to look for. Other bears will start to take profit if they have entered with market sell right away, right? And you can see right here we failed, so we're not going to high of yesterday. So where is it going? It's probably coming down to here to the next boundary line. But there will be some profit taken because we closed the gap, and there's a gap here with the bar body. So many trapped out bears who have not entered looking for a way to enter, so they want a pullback. And they also know that bears will take profit here. So if they're stuck up here, they buy here. They want market to pull back to here so they can break even. So you see, trapped out bears will look for market to get there, and then they're going to look for a double top or some sort, and they're going to enter. What if the market cannot go there and give lack of any relief to the bears, the bulls? Then we form some kind of a bear flag, like a 3-bar bear flag. And there could be a measured move down, right? But I guess you can measure it like this. Well, hold on. Right there. So, other way, I'll measure from there and then here. So that's is break even. Okay. And they're about to get their break even. Average price. But it's a trading range. Now we have a double bottom. We could be getting a similar to this. Sometimes price action repeats itself the next day or the following day. It's a similar price action you could get. But you can see that the bulls who bought the close of 6 or second entry long above 5 got a full break even. Here's what could happen, everybody. We could go up, we could come back down again. Okay, market has a wedge top. It's looking for a double top lower high and wants to sell. So this is your neckline. Okay, if we can't keep going higher and fail to get above high of yesterday, okay, we could still come down. This is a limit order market now. You are in a trading range, so market is betting against strong bear closes and strong bull closes possibly at the same time. But no one has sold this bar yet, so I don't know. But you could see every time the bears close a bear bar, bulls are rejecting, and they're getting not all that great breakouts, but they are getting breakouts. And now you have a huge bear bar, yet they rejected that one as well. But for 2 reasons, right? So it's basically they got stuck there for number 1, and number 2, the gap did not close. So see that right there. This is my bread and butter. I love this. Gives me great reason why bulls are trying to get back to these highs again. So they have the right to do that. They have the right to buy instead of sell. So they want to take out that high. They want to take out that high because they're stuck up here. But it's still the limit order market, so you have to apply the rules. And the rules are, if market is betting against strong bull bars or bear bars, that means the scalping environment. Look at the ATR. ATR is 6, half the ATR is 3. If anybody sells the close or above this bull bar, okay, they're going to go for a 3-point minimum scalp. If you look at the chart that I posted yesterday, 5 or more reversals, trading range open. So we're having a similar reaction. Market suddenly could come down to the moving average, go sideways, and go up. So we did have, remember I said we have a spike in channel, and we're going to come down and test this right here. Well, this was the channel, right? And I said we're going to come down and test right here. We did. We just extended a little bit, but look where we bounced. This is the key level. As long as we do not close a bear bar, we're not going to come down or get a breakout, right? Because we didn't break this. So now they found buyers there because there's a gap here, right? So now we go right back up. However, bulls need to close that bar bullish. Bears want to bring it down here. They want to bring the price back down to the moving average. So what they're doing now, they're scalping. So now they have 5.75, 2.5, like 2 3/4. So they are betting against the bull bar, but not all that strong. So that makes me wonder if there are any buyers right at the moving average or above. Machines are doing what they're supposed to do in an environment like this. So they are selling and scalping, but if they don't get the second bear bar, and this bar closes bullish, they will exit out of the market, and then we could get bullish push higher. Bulls trying to swing into the high of yesterday and above. They want to get to the measured move target of the opening range, which is right there. But I need a bull bar. Here we go. It's also cup and handle, so market wants to test the high of yesterday. Bulls want a breakout, but they need to close a bull bar, get above the midpoint of this upper range. We'll take out this high, the boundary line. I'm going to remove this. Crude inventory is coming up, so if you're trading oil, it's a very messy open due to the location and everything. But bulls close a bull bar, they will keep pushing higher. Because what you have here is an expanding triangle. Okay, so when market gets above, comes back down, it could get a breakout. But we need to close above that trend line. I see a question, so let me take a look. Do you think bar 8 being bad signal trap out bears, put limit order below, gets tagged, is on bar 10 but closes in range, then bar 11 pulls back to that price to get them out, break even? I mean, yeah, I actually talked about that, right? So I think you got your answer. I did talk about that, how they could buy and break even. It's basically, there's a small trading range, and that's a leg in a trading range. Buyers are looking to enter again, failure to close. Yeah, so became break even plus now. So the bulls are now trying to go test the high of yesterday. But still no close above this line. So market is trying to get to the 56.47, 56.50 area, like I said, pre-market, but we really need a bull close there. All right, so this is news related, everyone. Watch out. This is going to upset the bulls who bought, and now they're going to buy again to break even. But I did say we really need to pull back to the moving average. We still can't get above this. Probably buyers at the moving average, at and below the moving average slightly. If we cannot separate from the moving average, no one's going to sell. And then we could end up getting bulls again. See, they're buying at the moving average. They're trying to break even. Right? So if you're a bull, you bought the close or one tick above in a limit order environment, you're stuck. So you want price to get up here so you can break even. Labor Department, something about the non-farm Friday or non-farm reports, released something, which is, I think, that what is caused with this bar coming down very fast. All right, so I saw this bar 12 failing. I did buy, but disappointed. I bought again at the moving average. I have broke even right here with one contract, and I'm still holding the other contract. So now if this bar closes bullish, we could go higher. Yes, thank you. That's it. That's the one, Rick. But anyway, so you can see how that worked out. I said I wanted to see bears bring it down to the moving average, and I could buy there. I ended up buying a little early, and they trapped me for it, but the news really played a catalyst. So I bought again. That's fine. And then I broke even with one contract. So now my average price is way, way down. So I'm already making money with this contract. I want market to now take us up to the high of yesterday and then further up above to 56.49, 56.47, 56.50 area. But I'm not very happy with this sideways price action. Now here's what I see here. Double bottom, okay, higher low. This is inverse head and shoulders, cup and handle. So market definitely wants to take out these highs and test higher. I'm going to add another contract, but I need to see bull closes. I want to see bulls get above that, and I'm going to add another contract. I'm going to scalp that contract here and then leave a runner. Right now I'm in only with one contract. I also see something else here that is failing, double top neckline. So what I'm going to do now is that I'm going to measure this failure to the upside, okay? If we take out this high, 7 high, okay, with a bull body, market can push even higher to here, but I need bull bars. I'm not very happy with this sideways price action. Bulls are still not out of the woods yet, but looking good. Every bar closes, it's looking even better for bulls. So I'm bullish, not bearish, and I want market to now take out that high and keep going higher. That's going to be my target right there. All right, I'm excellent. Just added another contract. I'm going to take a contract off. Is high of yesterday. Just took that contract off. Now it's going to going higher. Let's see if I could do better than this. Ain't that a beaut? Let's go. This is great. So, but there will be some scalping here. That's a measured move target of the opening range, that little gray line. But I think we're going to push and test this 152.25. But this is my target. So that is 56.62. I don't know if I'm going to be able to get that, but I might. So 56.62. I'm going to put a 61.75 just for kicks. This is just beautiful. And we didn't have to pull back. So we just broke above. I'm worried that we could still pull back and it could be a deep pullback. This is a 1 bar breakout. There's a measured move there, but the problem here is that we're also breaking above this trading range. There will be some sellers waiting above, so watch out. From here to there, this is an important area. There will be a ton of scalping by bulls. Knowing that, we could even go and test the 56.55. Right now we're overshooting 56.45, so it's probably going to come back to the 56.45 looking for buyers, even if it goes higher. But I want you guys to be careful right here. I like to see this area strike. So I hope nobody sold this bar 9. There was a wedge there, which I kept informing you guys there's a micro and there is a macro, right? So we came down, in theory, closed the gap, but technically it didn't. So the bulls bought again, break even, came back down, and then bears are not able to close a bear bar. I did say probably buyers, we might test the moving average and buyers probably be there. They showed up again, so I bought again. And broke even, held a runner, add another one, scalped again. Now I'm scalping again. So as the price goes up, I take profit. And then if I see more bars, I'll add again. But the goal is to always have a runner always, and then get paid along the way. Some people don't like that. They're all in and all out. But I mean, look at the price action, right? So we need a follow through. We have finally a breakout. Now we need this bar to follow through, and I don't want to see upper wicks. I don't want to see weak breakouts. I want bulls to close a really good follow through bar here. Goal is to get to that top of that zone, which is right here. We're probably going to get up here now, but we might need to pull back first. On the higher time frame, I have a target here, 55.25. So just take some profit there. And if we become more bullish, right, this cup and handle breaking out, we could go up here too. But I'm more interested in, okay, so I took profit here. I'm more interested in right there. So that's what I'm looking for. So how are you all doing? Are you making money? Are you losing? Did you just sell? Long? Okay, great. Talon didn't take any trade today. I mean, that's okay. You now have a strong 2 bull bars. Really good job, bulls. Actually 3, but 1 breakout and the follow through. Bulls will probably gonna buy the first pullback. ATR is large though. I want you guys to be careful with that because pullback can be deep due to the ATR value. Trader trick today, a bit tricky, but luckily I watched and didn't sell. That's good. That's one way to stay is green, right? No money lost. We could pull back, but it's nothing here, so it's still making its way up. But I don't like that upper wick. So you can see that there's some profit taking. Now, another way, I'm going to mark this. That's a measured move. Another way, there's 3 bull bars, right? So that is also, I'm measuring the gap. So I can, that's also another one. I'm interested. But that does not give me a good feeling. I hate in the middle of trade, I get a connection loss. See what happened there? That target on the higher time frame is tested. Market can still go up. It's just that it needs to come down a little, pull back. Possibly buyers underneath bar 15. But we take out the bar 15 open. I think there are buyers underneath there. What about coming down to the breakout test area? Buyers are there. So from the low of 15 or the open of 15 all the way to the high of 7, buyers are waiting. So is 42.75. There might be buyers there. You should have taken profit. That's what I do. It's a breakout, but now we're also breaking above this trading range, right? This is also squeeze. So what happens with squeeze, and I've said it many, many times, and hopefully you guys remember it and recognize it, that the first breakout they buy, they get trapped. Market pulls back to the moving average, sometimes moves underneath. Everybody starts to sell, then they trap you again and goes up. So it's probably going to get there, but it needs to take profit. So market makers want to get there, maybe even higher, but they need to first trap you, upset you, kick you out of your long position, then enter you into a short position. As you sell happily, comes down to the moving average, you sell even more, and then they trap you again. So this is what's happening. So it hit my stop, break-even stop. I'm flat at the moment, which is fine, but I will enter again. I'm not selling this. I don't want to sell this. I'm flat. I'm going to stay flat. Market could come down to the bar 9 is close or low if bears accelerate the selling. They're trying to close the gap. Now, there is a breakout, so the breakout point is here and here. Bears want to close this gap. They close the gap. I will be even extra happy for my stop being hit, my break-even stop being hit, and I'm out. I already made a ton of money, but I don't want, if the bears take this out, they will either sell the first pullback or they're going to continue to sell. The goal is to get to the 9 close and 9 low. This is now getting way, way violent. Bears want to break this trend line and sell further down. Now, this is kind of extensions. I don't have extensions, but if you were to put, okay, so basically we had a breakout into the extension, and then now we're selling. Rather than selling here, we're selling in there. So that's a boundary line. We're probably going to come down to here now, 26, 56, 26. If the bears close a bear bar, not only 56, 26, but we're going to probably test, and then we can even test right here. So I'm glad I got kicked out because it's trying to come down and test that trend line. It's right here. They're buyers here. We're going to bounce here briefly. What could happen is that we could come down. Where's my, come down, go up. Okay, so you got a big up, big down, confusion. So now we're going to go sideways for a while. So that sideways could be here only to form a bear flag and then sell. So target is, so if you sold with a market order, just pay yourself right here, right now, a little bit, or right at the tag. ATR is too large, so it's probably going to overshoot it and test the trend line, but it could actually overshoot and test right here. But your job is to get paid, so you really need to pay yourself. It's a big up, big down confusion. We're going to go sideways. Wow. I am so glad that stuff that I trailed up got hit. I'm out, and I did sell this bar. I was going to stay out of it, but then it started to accelerate, so I know exactly where it's going. It took out, I can't say, oh, come on. Oh, something else is selected, that's why. So I saw this is being taken out, sold into this, take some profit, and then held a runner. Now I took profit there. Now, what about bears taking out this trend line? They could, if they close the bear bar, we're still going to bounce, but we can now continue to come down. So there's a little bit more room to downside. If we move underneath this boundary line, then we're coming down to here. So yes, there's a trading range, but there's always an extension of a trading range, right? The upper extension and the lower extension, right? So it's invisible, but I always have back of my mind is if I'm using L's trading range technique, and I know that I could get trapped here. So that's why I keep warning you guys saying, yes, this is going up. I'm adding, I'm selling, I'm adding, I'm selling. I'm taking profit while holding a runner. Always want more from the price action, but that doesn't mean I'm going to get it. Now this is done. I'm not interested in this anymore. So what can market do here? We have an expanding triangle. So we have an outside, and now we can have an outside up, and we can have an outside down. So today could be a going up there and then closing down below. So market might be wanting to test somewhere here on the daily. So we could end up, if we break the Globex low, we could come down to here. So what do we need here? Well, we need bears to break this boundary line and continue to sell. I have a magnet, which is 1 hour EMA. 1 hour EMA is right there on the hourly chart, and approximately on the 5-minute is right here. So I've taken profits in case we bounce a little bit and go up and then sell. But profit taking hasn't begun yet for bears, so they seem to be very happy selling this. So I posted a chart yesterday. Now let me show you again. If you have missed it, is if I post a chart on Discord, do yourself a favor, save it, because I go by them all the time. So, and I'm going to post it once again. So just give me a second. Okay, take a look at the bottom left corner. When contracting, it is triangle, right? So similar, but it's a little bit more violent, right? So it's coming down, and it's coming down there, but with bunch of bars. But look what it did. It actually took out the low of day, so makes a new low. So we already took out the low of day and the trend line. We're at the boundary line. Many bears, they started to take profit because the decent place to take profit is, so that's, I did the same. So now we go back to the trend line. If we actually find sellers there, that's great. We could continue to sell into here, okay? Or just like here I did, you no longer need this, but I'll keep it. Low of yesterday's magnet is 1 hour EMA's magnet. It's just that we have big up, big down confusion. So we have to go sideways and up a little bit and look for sellers again. So this is probably going to get a second leg, maybe even a small third leg down. Now, what about the bulls? Can they actually show up here? Well, it's right now trading range, kind of. Why? Because it's an expanding triangle. So these are support areas. But I prefer this area to be tested before buyers show up again, okay? So could this be the actual handle, which is a much larger pullback? I don't want to buy against this bar. So bulls need to show me that if they can close that gap because it's trading range, then that's great. Then I'd be interested in buying. But the problem here is that there was a gap here and they closed it. So this is an ATR bar. If you measure this bar, find its 50% or measure the entire thing, right? So from that high to that low, we could, because ATR is so big, we could go up there and we could sell from there, okay? So this is the pullback. I did take profit there. Nothing closed below the boundary line, so you can't really keep selling. You have to allow, due to big up, big down, confusion, sideways and up price action. But how much up? Well, that is the halfway down. Halfway up right there. Now, we could get there. Or you can measure the ATR breakout bar and somewhere around the 50% to 66% pullback. And that will be around here. So I'll mark that. Mark this whole area. I'm gonna look for sellers. And then I'm gonna mark that. Well, it's right at the, don't need to do that. It's right at the, too many things. There we go. There is a trend line here. We broke it, but bulls did show up. That's because bears taking profit. I'm not sure if there are any bulls there. So bears want a 3-bar bear flag and continue to sell into the magnets, low of yesterday and moving average, or somewhere in this area extension. Bulls want get back to somewhere in the middle, but not a good. Okay, so bar 18, could it reverse the market? Well, I think we could still get up here, but there are bears there. Now, if we get up there and start to get above it and close this gap, then I'm going to question how bearish is this, right? So as far as bulls go, they are trying to get up into this area. But I'm not going to buy this. Not interested. Bears want another leg down, or at least is a couple of legs down, even if they're small. So what they need to do now, close a bear bar. If they take out the 18 low, 17 low, there are probably sell orders there. Orders there. Bulls are trapped. So market wants to come down, test this area. But I still don't see break of that boundary line. So I took a lot of profit there. And I want to sell, but I would like to see market twos get up here. If bears cannot print a bear bar below the close of 17 or the low of 17, I'm not going to add another contract. But if they do that, then I'm going to add another contract, because we can come down to here, maybe even here. So I'm still holding, but I want bears to close that bear bar. If not, I'm going to be selling here. I don't need to keep this measurement there because I don't see a bear close yet. Trade small because ATR is 11 points. What does that mean? Average bar is going up 11 points. In this case, probably twice the size of ATR. So it's overshooting levels. Big up, big down means is confusion, so it has to go sideways and up until find sellers again. Now, you're in a trading range, so bulls want to, but I think there will be some sellers here. What about this being a big cup and handle? If the gaps start to close, then I'm going to target these prior highs again. But right now I'm looking for bears in this zone. We just tested the 50% of this bar, 17, and immediately slapped down. So that means there were some sell orders there. So bears stuck down here. They might have sold here, but not every bear had a break even there with bar 19. Now, if these bears don't see the bear bars forming here, they will be eventually exiting out. But they only exit out if they see this gap is closed. So otherwise, they know there are a ton of sell orders layered here. If the bulls are strong and they eat into those sell orders, okay, that means they can overwhelm the bears and then close this gap. We could go right back to the 15 low and test it. I'll know if this gap closes and we start to get above. This is the 66% right here. If we start to close bull bars, we're definitely going to test this bars open. And then we could even get back up again to higher of yesterday. But that is speculation. Right now, I'm still expecting in this area bears. So somewhere even here, 50% of this leg, there could be sellers there. which is that dotted line above, which is that dotted line above. So you have, for bulls, you have a leg up, pull back, leg two, the leg up, pull back, leg two. Bulls want to test the upper third of bar 17, but bears are stuck, is trap, so they want market to come down and test the 17 close, 17 low. Some bears already sold with 19. Eventually it came down here, gave them a break-even close, but that's machines, okay? And only a few institutions probably did that. But the rest is still looking for a good place to sell. This is pretty fast, pretty strong, right? So say this is a surprise, right? It just trapped and came down. Surprise means is bad price action, so it's like a low probability event. When there's low probability event, right, market will get probably a second leg down. Those are selling stop above. So they're probably looking for several legs down. So that's why I marked here, if there are any sellers, it could be average. They might want to sell there. I'm getting the difficult price action back to back. But anyway, we'll deal with it. What about the small pullback bull trend? Is rejecting this, and then yeah, we could close the gaps. That's fine. We could even go all the way up here and then come down. So trend line broke and wedge bottom, but these bears are not happy. Could this be back to always and long? Well, 4 bull bars. I like to see bulls actually close above the moving average. Then yeah, this is the 50% of this entire move down, the dotted line. Market could get there. I'm gonna get rid of this trend line. All right, so we're in the area of importance. If there are any sellers here, that's great. If we keep closing bull bars, especially above this, that's it. Then the game over for bears. We're gonna close this gap. We're gonna go test the close, the open of bar 17. So I'm glad I took profit here. I don't like what's happening here. And I think I'm gonna start buying if we can just get there. It's trying to get to the 50%, which is right there. So 37.50. Or higher. Bulls want to take out these bar 17 high. The 18 bar reversal is what they're trying to do, but still there could be sellers here. Upper third, I said, we're probably going to reach. Why? It's an outside bar, inside bar, and a trap. So they're trying to go and test the high of 17. Any sellers, they will try to sell. We could pull back, but then bulls will buy again probably. So I'm looking for market to go up here. If there are any sellers, could be up here. Market's trying to get back to the 15 low. We closed all the gaps. So bears could, instead of selling here, they could sell up here. Okay, so be careful here. All right, so we reached the 50%. So anybody who bought and stuck up there getting a break even here. I'm looking for bulls to keep pushing this higher, is test the lower third of bar 16 and high of 17, or at least the open of 17. But look what's happening here. Some bulls are, bulls also stuck here, bought here. Some bulls are scalping, right? But the bears stuck here, they're looking for a way to sell. But we close above this line. I don't think no one's going to sell until we reach up here. And then we might actually get something like this and then swing back down again. This is a very difficult day today. I think the market is deciding here. It at a critical level that bulls done a fantastic job buying. Okay, market double bottom. They trapped the bears, and some bears, quick thinking bears, actually exited with bar 19. Right, so bar opened here. Right, came down, gave them a break even, go back up and close. Many bears exited above that. So we end up going to the 50%. If there are any sellers, they know that these bulls, some of them will actually take profit or break even. But we are now closing above this level. So this is kind of difficult for bears now. We could end up going higher. So I expect now bulls to get us to the open of bar 17. Yes, it is. It's an outside bar followed by an inside bar. And we closed above, we're above the midpoint of it. So we're testing. So we're on the upper third. There are sellers here. But even if we come down to the midpoint, it could bounce back up again. Okay. So I'm looking for at least test of here, test of a little bit higher before the sellers show up. So I'm looking for now bulls to push this to 39.50. What is the open? 40, maybe even 41, slightly above 56.41. This is where we could test. Could have been there. Bulls want 20 points. That's 1975. 20 is right there. We could test that 20. That's what I'm looking for. We can even go higher and tag this area before we get into sellers. They haven't even tested the 19, so I expect bulls to push this higher. So minimum 19 to 20. I'm going to mark 20. So technically, we're still in this trading range. We did punch, okay, through the lower third, and immediately they found buyers. So what about bears? I mean, bulls haven't really reached that 20-point swing here, so they're still trying. I probably wouldn't sell anything here. I would give bulls a chance to get a 20-point swing from the pivot level. Anybody who bought above it, they could be looking for a 20-point from above 19. Close. But the 50% is pullback is holding. I'm sorry, yeah, 50% pullback is holding. So, like I said, market could be deciding here. Bulls are scalping and we're going sideways. It's because anybody who's stuck there, that's a great place to, break even average. So, can we come down? I mean, you got 1, 2, 3, 4 bars, bull bars. I probably, if we get another bear bar, possibly we could come down a little bit, but I think the bulls still want 19 or 20 point above. It's like 38.50 to 39.50 area. Bears considering to sell here because it's the 50% pullback, but they need another bear bar. Could this be a head and shoulders pattern? Left shoulder, head, right shoulder, and bears resume. It's a deep pullback and it continues to come down. Yeah, it's a good place for bears to wait and enter, but they're not 100% sure that if the bulls are exited. There's a 20-point target here that the bulls haven't really tagged. So I'm hesitating to sell here when there's a target up there, as bulls are showing me strength that they want to close this gap. So I have to give them a chance here. So you got is up, down, up, right? Down. We might get another leg up. I'm going to remove this 50%. I think it just lived its purpose. So we have a trading range. Okay. So that's what we are dealing with right now. Up, down, confusion, sideways, and up, I said. So you really needed to take profit here. I exited out of my runner once I see 3 bull bars. I wanted to buy, but we reached that 50%. So I automatically expect bears there, right? And the bulls to exit out. So I didn't want to buy into that. Plus, it was just too late. Because if you actually measure from here, right? So we reached there. Oops, that's an error. That's already a 10-point-ish, 9 to 10 average. So 975. See how that worked out. So they're taking profit. These bulls are taking profit who bought above 19 high or 19 close. Okay. So I was going to buy and I'm like, wait a minute. They're taking profit. What purpose do I have? Let's wait for a pullback and then buy. So anybody measures from the pivot, they wanted to a 19 to 20 point, which they haven't really tagged yet. So they're trying to get there. Sellers might be in this area. Okay. Up, down is trap the bears underneath the moving average. Right. Trap the bears underneath the moving average. Moves above the moving average. Gets up into this gap area. So that gap area is right here. And then even makes a new high today. After that new high comes back down. Now I think what we're going to do is go there and then come down. I'm worried that bears can actually swing suddenly. That could have a much bigger right shoulder with a neckline. So, or we're just going to come back to the moving average, okay, from here, and then we're going to buy instead of selling. So this could be us today, but we need another bull bar. Get in here. You're welcome. You have a good day, Tom G. But this bar has to close bullish and take out this dash line. I'm going to remove this. We no longer need it. Just to keep a clean chart, just to be sure. Can the bears sell? We're still below that 50% pullback. They could see this as a minor pullback and they want to sell because they're stuck down here. They want price to come down, but we have to move underneath open of the day. We are above the open of the day. So we move underneath the open of the day. We move close of yesterday. We become bearish. Yes, we can sell. But I think this area is better. They might They want this price point to break even average 27.75. But we're still at the open of the day. Open of the day is now going to be magnet because we have a trading range here. As long as we stay above it, we could still get up here. If we come down here, that means bears are going to get an average price. If they take that and exit out of the market, we could get bulls back in the market again. So I hesitated to buy because of the area. Wasn't happy with the premise. As the bulls were from above 19 taking profits, so the bears getting two-legged move down and hopes of breaking even down here. But where is that bear bar closing below open of the day? They need to get that. If not only want to get down here and further down, come down and test the 17 close and lows. So this is why I want market to keep going higher. But 50% area is a good place for bulls to exit or at least break even, and the bears to try to sell. So I'm going to let them duke it out here and then give me a decision what they want to do. It's confusion, right? It's a lot of confusion. Bulls want to bring market up here. So if I want to sell, this is where I want to sell from with a second entry short. Otherwise, I'm not. I could buy it. If this bar closes bullish, then I'll definitely buy it and target the bar 7 high is somewhere is lower third of bar 16, I said, and above bar 17. Sometimes you have to look at the market as who's stuck, who's trying to break even, who owns the market, how confused the traders are, to determine maybe you should stay out of this price action and wait for them to give you a solid decision. Can they make it? They came down to what I call as an early bird exit, like early exits. It tested right that line, bird exit, like early exits. It tested right that line. But bears want this right here, so they're probably going to pull it down to 27.75. Difficult to sell when there's a better place to sell up there. But look what happened. So is first bear bar close. If anybody sold, if I actually add the you'll see why we bounced there. That was a 33% pullback. Instead of breaking even, bears were not very happy. So they try to break even at a good price, minimize the losses right there. So I pay attention to these levels, right? They were looking for a sell bar. Okay, that's it right there. Look how accurate it is. Everybody if this bar now closes above 0%, we could easily get up there. So bears trying to prevent it from closing because they want this price. This is their best average. Okay, so this is what they want. If they prevent it from closing above here, they could still reverse it back down to here. You always want to get some average price here to break even early if you're not gonna see market coming down here. But you have to wait to see it. Okay. Now, See how that's happening? It's trying to come down. Bulls try to buy. That's the first entry, failed. Second entry failing, that could bring price down here. So I always wait before I do anything. I look to see what they're doing at the 33%, what they're doing at the 50%. Okay, so if I'm going to buy this, I want a good bounce at the 50% and good bull bars. I'll buy it and I'll take profit here. But what if they come down and close below the 50%? Market can easily reach back down here. So it's confusion all around. Is everybody's stuck? Bulls stuck up there, bought here, right? Micro double bottom, trap, and then 50%, they averaged it out. Now bears selling there because it's a good place to sell. And it was also 10 point from 19 high, just about 10, it was 975. So they know that these bulls are taking profit. Hey, let's sell into that. Let's minimize this before this turns on us because we could go into that area and then sell again, but that would increase their losses. So they're trying to minimize it. And in that process, they're trapping every other person, every other trader, because nobody knows how to read this most of the time. But if you spend so much time in the market in these situations and you measure and you see what's happening there, you could be safe. You could even take a trade. I have shown that. That's like this. From the high to the low. That was the 50. So now for break even, I call the 33%. If you measure it different, it would say 66, same thing. It's a 33% early bird special. Average and exit. We still haven't closed the bull bar yet. So if the bulls close it, then that's good news for them. But if they fail, we could just dump right into the 50%. 27.50. Bears trying, they'll probably want that 27.50. We're probably going to tag it because look how many times the bulls try to close above and failed. We'll get there. Can markets swing from here? If we close below the 50%, yeah, they're going to want to come down to here. And then we could even swing further down because then this becomes a bear flag. Head and shoulders with lower high. That means they could be in a rush to sell, but I'll believe it if I see bears taking out this with a bear close or two. So I don't see it yet. We still need to close below open of the day. We did close bar 25, but we needed consecutive bear bars. We also need to move underneath 33%. So there's a lot of trade taking place here. So much scalping. There's a bit of a gap here. So bulls are trying to maintain this gap to go higher. See, they failed. Now the bears failed. So this is a complete mess. So now if we close above that 0%, bulls can take over again and the bears will then exit out because we have a double bottom here, 25, 27. So the bulls now want this high and get up there. Wow, this is rough. I'm staying out of this. This is a complete mess here. If the bulls close above it, then you do have a flag here, and that's going to close the gap. We'll get there. And that's where I'm going to look for sellers. But this, I'm staying out of it because bears are still trying to prevent, but I think they lost their chance there. So now bulls are trying to take over. I'll believe it when this bar closed above the 0% with a bull buy. Then they're going to rush into this, maybe even 15 low we could test. But I'm more interested in the bar 7 high. Only if we close a bull bar above 34.67, well, 75. This is difficult. This is where you test your patience level to see is, how patient are you? Are you entering every bar and just depleting your P&L or account for that matter? Many people lose their accounts in this area right here. Bears want that 50% tagging. So where is the good closing bull bar? Where is a reasonable bull bar to buy and say this is a double bottom bull flag, so we should take out that? They had a chance, but they totally ruined that one. So now bears are going for it once again. This is where everybody throws their hands up in the air and is like, I'm not a good trader. No, you could be a good trader. It's just that you have no patience, right? So you just don't know where that midpoint is. You don't know where bears are, and you don't know where they're trying to take the market. And you can't see these decision-making areas, okay? You just buy it simply. Yes, double bottom, but double bottom has no meaning if there's no bull bar closing, right? So where's that bull bar? Bears are selling above bars. So now they're going to tag that 50%. I'm going to open the question box on GoToWebinar before I leave this live session. Left shoulder, right shoulder. It's the funkiest neckline, but I'm going to mark it anyway. And that's from here now. We did break that, so that's not the way I want to mark it. I want to mark it like this. Okay, so what needs to happen for bears is that they have to test this 50%. They have to close a bear bar, come down, and close a bear bar right here. Okay, then we could sell. Okay, low of yesterday, and 1 hour EMA is going to be magnet if we break below this neckline. So there you have it. They're selling. And they close a bear bar. So decision was made here. Bulls exited, and bulls already did exit. I mean, they were just happily, going against these and, breaking even right there. So they're not going to jump in again until, these bears break even. So when do they jump in? If we cannot get down here, if we cannot get down here 17, okay, and not close a bear bar, they see bears will try several times, right? And if they fail, they see the bears are failed and they could jump in. So now you have bar 28 is there are, could be sellers underneath already entered. But buyers were here. But those buyers exited, so I don't know how many of those will buy again. I don't think this is a strong area for buyers. I think the bears are going to finish this job. Not only they're going to finish it, they're going to come in here and they're going to close below it. That means they're going to get follow through. Well, question here is, this is a good place to be patient and wait to see what do we look for. Well, I think I explained that pretty thoroughly, but if it wasn't clear, I totally get that because you either didn't hear the whole thing that I was explaining, but was it clear for those who actually followed what I was looking for there? Because if it wasn't clear, that means I'm not doing my job right. So I could explain again, but it's a long explanation, right? But I'm going to do this again. So to the person who asked the question, pay attention. Okay, so what do we have here? We have big up, big down confusion. What did I say? I said around here, buyers are waiting. There was a trend line. We broke that trend line, and then immediately bulls showed up. That's an inside bar, right? But something this strong like this, right? So this is probably bears are selling with a stop above. They want another leg down, maybe a third leg down. But the bulls are stuck here. So what do the bulls need? You see something like this. You measure the whole thing, okay? And you see that okay, bulls trap the bears, but really that's where machines sold immediately, exited, okay, right there. So bears are not going to be showing their faces until we reach this midpoint. Okay, that's the 50%. But the bulls will not, bulls will not exit out of the market because they bought here clearly, maybe above 19. So I'm counting points, I'm counting ticks, right? Here is, I think I said 975, but I'm going to do that again. No, 950. But between the 9 and 10, that's a good place and happens to be confluence area is the 50% pullback. I said sellers could show up there because they know these bulls are going to break even there. We're not able to close above that. That means we're not going to get in here very quickly. I said we're going to go sideways because many bulls are deciding here. More bulls exit out, no one's to buy, this can come down. What do the bears stuck here couldn't exit with 19 need? A bear bar. They got it with bar 22. So what do you need to do? Well, if you were a bear and you sold the bar 17 close, you see a bear bar inside bear bar. You sell the close, you sell under. Where's your break even? Average break even is right there, but actual break even is 17 close, right? So you're going to get a good price. You're going to probably fix your bad trade if you were a bear selling the 17 close and trap. So there, you're going to sell there again, and that's why I said this is where you watch, right? So here is, let me measure that. And so you'll see the price point, right? So market was keep testing this 100%, right? Do you see bull bars closing above it? We kept looking for it. I said, look, we came down, that's the early bird special, 66, and it bounced. It bounced again, but no bull bar closing to get us up here. So now I said, okay, fine. Bulls tried twice, failed. So now bears are going to take over. So first entry, second entry. And I said there are probably sell orders underneath bar 28. They did. So now bears are still trying to get to the actual break even, which is 56.20 and 20 and 2 quarters, 20 and a half. So that's where they're trying to go. Okay. If the bulls were to close above this 100%, we would have been already made it up here, but they failed. They failed several occasions. So now you know the average price will be hit. And if we close a bear bar, wait for market to try to get down to here or close as possible. Now, my intentions for bears is not only just the expectations, I said not intentions. Expectations is the word. Not only test the 17 close, but move underneath. So we can come down and test this neckline, break the neckline, pull back, and sell. Market is trying to get to the low of yesterday, probably, but only if they take out that 0%. Was it clear to the person who asked the question, or anybody who didn't catch it but now? Listen, if it's still not clear, we could circle back and I could just tattoo this in your brain and you'll never forget it because you get this all the time, all the time. It's the fight of the bulls and the bears is who gets break even, okay? So you just have to understand it and see it. If you see it a couple of times, you'll never forget it. That's the tattoo. Like you tattoo yourself all by yourself. And then you always look for that. And then you never take early trades or premature trades. You always wait. Okay, next question. Wow, you guys are very quiet today. So now, full break even. Great job, bears. Now close that bear bar below 17 or the close of 17. Then we could continue. What about bouncing here suddenly, right? Well, we might. I don't know. We might. But if that bar closes, we're coming down here. We're probably going to breach that and then tag one of these and then go up. Okay, question. Somebody wants a complete picture. Let's see. To complete the picture, What was the situation for the bulls who bought at the high of 15? Would they have bought the close of 18.2 to break even in the middle? Yes. So basically, you are confirming your understanding here. I don't even have to answer this question. You just answered your own question. Yes, exactly. They probably bought the breakout bar above. They might have bought the close of it. But in a situation like this, right, what this is a low probability event. Well, it really wasn't actually. It was a trap. We already knew this was a trap. So it came down. So you just measured that, okay, everybody's trapped. Those guys are going to try to break even before, you know, this just plummets down. So plus you're at a tight trading range, right? You got a trading range, whether it's expanding or not. That is the apex of the triangle. That is the 50% of the trading range. That is the balance zone's heart, okay, heart of the balance zone. So that's, you know, area of interest. And they test it and it bounced. Great place to buy and expect a break even. Now, can market come down more? Well, bar 30 needs to close below the close of 17 at the minimum and take out this area. But sometimes you don't get it. But let's just give these bears a chance. Okay, 30 failed, not good. But it's not a bull bar, so you can't really buy anything above it. This is still bearish. It's coming down. This is, in fact, now trying to become a, well, this is always in short. It is also trying to become a small pullback bear trend. Now, we need to take out that low. We need to take out where bulls trap the bears, okay? So we still need that close below 17 low or 17 close. So this is now bearish, y'all. So this is still targeting low of yesterday. We could come down to low of yesterday, like tag one tick under and reverse back up. But if you sold this, your job is to take profit here because this is a bear flag. What do the machines do? How do they trade the flags? If they sold, they don't enter with full contract size or full contract lots, only quarter or half. They take profit here. They see confirmation, then they enter full, and then, you know, they take profit. So now let me show you guys a trick. Trick. It's a trick time. Take that. If you see the breakout, if you see a bear bar taking out that low, go to your Fibonacci extension, measure this bear leg down. Go back and close it right there. This is your target. That is your target before we reverse back up. But what do you need first to see bears bring prices back down to here? You need a bear close taking out that low. So sometimes it does this and everybody jumps in too early and it just goes up. You don't want that. You want to see the bar close. But there's 2.5 minutes and it's already accelerating. It's probably going to reach there. Isn't this beautiful? So what is this now? Today is an outside down day, or it's trying to be on the daily, right? On the Globex, it already is, but it needs to go below yesterday's low to truly become an outside down there. Today can be also almost outside down day. That means we would reverse back up too early. But this is the target, and a further down low of yesterday is also doable. Magnet is the moving average, hourly moving average. Well, the question, like, will this become a double bottom? My crystal ball is a little bit cloudy today. It's too much dust on it. I don't know. But it is possible. Now, where can it be? So the person who asked the question, where can it be double bottom? Just tell me. But just look at here and tell me where it could be double bottom. Low of yesterday. Great place, right? So if Fibonacci levels are not always 100% accurate. It's just somebody's interpretation. 127. That could be the 123.6 or 128 or 30 or 31. Who knows? But this works for me long time, so I keep it. But really what you should be focusing on is the low of yesterday. So yes, we could have a double bottom there for sure. Okay, it is already noon. I am done with my day, but one thing that I have not done was, give me a second. Okay, so that's that area. That's this area. Comes down and finally reverses back, but ends up in a trading range today. So I want to make sure I do my job. Encyclopedia is your friend. If you don't have it, subscribe to it. It's $1.99. Lifetime access. It's the best tool you'll ever have. L's homework. So we get to actually have access to this is homework. And it's just basically a roadmap. It just gives you the roadmap. But I want to pull one more chart for you. Here is another one. We could have that double bottom. Instead of testing the low of yesterday, we come to it and then just bounce. That's a higher low, slightly higher low. Major trend reversal. But really what this is a expanding triangle. Market could even reach here. Well, but if we reverse, we could reverse right back up again. So you see, that's that higher low. But bears want this target right here. So we might go back to the breakout level and then see if we can get any bears there. But if we fail, then that's it. We have a wedge bottom here. 10, 19, 31, right? This was a strong pullback, which bears sold because they always look for a second leg. What did I say about this leg? Anybody remembers this? Hint, I said, this is some kind of an event with a stop above. What does it need? It's a low probability event. So that means it needs a second leg down. Okay, and anybody who sold it with a stop above, they want follow through. So I wouldn't, even though there might be some buyers underneath, maybe 2.5 point, 10 point below, they will try to bring it back up to the 19 low eventually. We already bought and reached 19 low. If no more buyers, that's the breakout test, and we could still find sellers, and we could reach here, maybe even down here. I don't know, but I like to see bears reach here at the minimum and the low of yesterday. Now, remember my neckline? I said it's a funky one, and we're going to test it. Look, we tested it and we bounced. Bears did not actually break that neckline. That neckline is still holding. So that means, let me tell you something about the head and shoulders patterns. Everybody loves to sell them. But smart traders, seasoned traders, they know that's actually a reversal pattern. They look for this, and then they instead buy. Globex low is broken, but not with a bear body. And we need a bear close in 6.5 minutes. Now we're testing we found some, found some buyers about approximately 5 points below. Now those buyers are bringing price up. What are the chances of getting a wedge bottom and reversing back up to this leg starting point, back to the open of the day? Well, it's a trading range at the moment, so the open of the day is always a magnet, but bears are disappointed. They got a nice breakout. They want to follow through. So I'm watching to see how this bar is going to close. If the bulls cannot close above the 100%, we're gonna come down here. We're going to dip below that trend line. So anybody's still selling, hoping the market would get down here or here. Now, what if we don't? And in fact, we actually go up and then sell. Yeah, it's possible. We could get that too. So it's always in short, but in a trading range. And we're kind of at the lower third. So it's not all that great. Plus it's noon, so we could go a little bit sideways. I expect bears to bring it down. So I'm not buying. But now we close that bull bar right there, and we're already back inside. That's not good. That's not good for the bears. So they have to either reject this and close a bear bar and sell, or this is done until we find sellers again. And I think I posted that chart and I said this could happen. Or this was the chart, sorry. I just showed you the wrong one. This is one of those days, bulls and the bears making both sides making money, right? Is every time we make a new low, they're buying, right? Every time we make a new high, they're selling. So 5 points below 19, they bought it. I think it was around like 2 points below that they bought it. So bulls are looking for 10, 15, 20 point swing. Bears are making that much as well. Bulls are making that much. So it's pretty strong pullbacks. So it's disappointing that they couldn't get to my target, but that doesn't mean that they're not going to sell. Because if anybody sold there, they're still holding. They might have, the problem here is that, is this a major lower high or a minor lower high? Now, look, this is the low. We have not taken that low, so that is a minor lower high. So they're going to keep the stop there. And when it gets to the moving average, they could sell again. Trend line is holding. You have 1, 2, 3, 4, 5 bear bar channel. So sellers probably above 31, and they could sell. If we keep going up with 2 legs, sellers could be right there as well. Market can continue to sell and test yesterday's low, and that's what they want. So they have to somehow, if this is too low, they have to reach an agreement area that is a better price to sell, and then bears can enter and swing again. You don't want to see this for a reversal like that. You don't want to see bars like that. Everyone will exit above that bar. Now, we could also get this, is we pull back, right? That's the head and shoulders. Came down, neckline. They broke the neckline, came down a little bit. Somewhere around midday is, they finally reversed it. Inside bull bar, second bull bar, first pullback, and then finally bulls are closing above moving average. That's small pullback bull trend. Not all that great, but still there. And you buy. And you target this area where they sold. So I don't think this has set up yet. So we could come back down one more time. Inside bar 32 is upper wick. They bought it anyway. 33 opened higher. That's good news for bulls. And then closed higher than the prior bull bar's high. But sellers were above 31. They're not happy with this. So they could sell again. But if we get the third bull bar, that's momentum for bulls. So bears need to prevent that momentum, bullish momentum building up. So what do they need? They need to reject and close bar 34 bearish. If they can do that, then that's it. bulls will have a hard time starting a small pullback bull trend. Yeah, a bunch of failed breakouts. Bulls failed, bears failed. So here's the double top. Here's the double bottom. They tried to swing, failed. Now bears are taking over. So I'm waiting to see who's going to close this bar, bullish or bearish. Bulls looking for momentum, so this bar has to close bullish for them if they want to go and test the moving average. Look, there's a wedge bottom. Is 3 bull bars, 1, 2, 3, even reach the moving average. Finally, they start to buy and they go back up to that neckline, wedge, or the starting point. And then it goes sideways. They try again, fail, and stay sideways. At the end of the day, we get a late bull breakout. So what do we need here? We need another bull bar. If we don't get the bull bar, then we'll come down. But if we get the bull bar, we're going to get back up to the moving average. Bulls want to get back to here. So I'm looking at TRD part 15. Your answers are probably in there. What do I need is I need a higher low for a major trend reversal. Market could reach here as well, but I don't think it's going to be that easy. What do I need is I need a higher low for a major trend reversal. Market could reach here as well, but I don't think it's going to be that easy. But it all starts with the third bull bar, then pull back, and then bulls can buy that. They want to close a bull body above 31 high and get to the 1 hour. If they close this bar in 50 seconds bullish, they're definitely going to get there because that's 3 bars. Then they will make their way to the moving average. So there you go. They're pushing for it. This is where I would exit the short, especially the second bull bar and the third bull bar went above the 33. It hasn't even closed, but it's obvious that bears are going to be done for a while. So this is where you exit, and this bar closes bullish. It's going to get to the moving average probably. It's going to try. Because bulls bought every new low. So this is no different. So now they want that target. 3 bull bars, that's good for the bulls. Momentum. And they're all by the close. Check that out. Look at the body 33. Look at the body 34. So good job, bulls. So they're now, because this is trading range day, so they're looking to close this gap. So they're trying to get above the moving average. They're trying to get back to here. And then we come back, we could go sideways for a while, for like a couple of hours. And then we could have a late bull trend in the day. What a mess. I really hope that they will come down. But this is where I no longer need this. So it should have been a very quick test, okay, of that target. But that's why the Fibonacci levels, whatever, they're just so subjective, not objective. So what you need is what is happening here. This is a confusion. So bulls bought it. So chances are if we make a new low, there will be buyers again. So put a trend line and see how the market is reacting. That happens to be my head and shoulders neckline. Did they break the neckline? No. So are they going to keep selling this? No. The neckline did not break at all. So now we go back to some gap. But if I were you, I would take some profit above the moving average and leave a runner into the 2R of the inside bar, 3220. You can also measure this and then expect that to your 1R. Okay, I am done with my session, everybody. You'll have a good day and be safe. You should have already made your money by now. And even with the break even, I think we did great there. But what about always in short bears? What about outside down day? They have to start selling right here. So maybe bar 40 midday, we could get a sell. Or the selling could begin around 1:30 p.m. Bar 48.50, we could start to swing back down to the low of yesterday. So watch out there, okay? So you saw the chart. It's under Part 15 Encyclopedia. I mean, that momentum is now, it killed all of the, bear is, case here, at least for a while. So if you measure from here, we already got the 1R. We're going for a 1.5, possibly 2R, 32.25. If you measure this, right, we're going there. It's the same, almost. So market wants to test the, right there, is some sellers waiting here. But I would take some profit here just in case. We can't reach there, but that's what they're trying to do at the moment. So they're probably going to reach there. But pay yourself a little bit. Really nice buy to close. Let's close that gap's close in a trading range day. There's a bit of a triangle here. So the heart of the triangle is your balance zone or the triangle breakout. That's target. That happens to be 1R. 431 outside inside combo, or 2R for the inside bar, 32. All right, I will see you guys later. Tomorrow, please take some profit here just in case. Tomorrow's Wednesday. Okay, Tim Fairweather and I are paired up. It's going to be a great day. All right, so he comes in the morning, and then I'll take over. I mean, he's going to set up the whole thing for you guys in the morning. So don't miss that. Don't miss his session. You can learn a lot. He does a fantastic job measuring things, finding targets, explaining. So I'll come in. I'll just, pretend to be, doing something in the afternoon, because he's probably going to tell us where the market is going to go and close the rest of the day. So, yeah, see you guys tomorrow morning. Be here at 9 a.m. And then on Friday, Brad and I are paired up, and I'm in the morning, and Brad closes the week for us. Okay. Tomorrow is PPI. It's jobless claims in the morning, so starting 8:30, ton of news tomorrow. So we're going to probably have some volatility come in the market tomorrow to set up even more volatile day for Friday. So expect some volatility tomorrow. All right, bye y'all.